Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. And leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to the Investment Banking Leaders Podcast and best of luck on your growth journey. So we have another top guest for you all today. I'm super excited to be joined by Bryan Kuhn, co-founder and partner at Vestra Advisors in New York. Now, Bryan's a seasoned investment banking professional with extensive experience in delivering bespoke M&A and capital solutions to businesses in home building products, construction technology, and residential services sectors. Bryan started his career at Citi back in 2011 as an analyst, and across a 12-year period climbed through the ranks to director level and a key member of Citigroup's Global Industrials Group, where he spearheaded the firm's construction technology initiatives. And during his career at Citi, Bryan successfully advised on many of the industry's most complex M&A, capital markets, and strategic advisory transactions, as well as raising over 30 billion for his clients across the ECM and DCM areas. So just under 2 years ago, after a sabbatical, Bryan decided to take his career in a different direction and stepped out on his own to form Vestra, which has seen rapid success and has ambitious growth plans. So Bryan's passionate about taking control of your career, setting goals, and building something special. So I'm really excited for our discussion, Bryan, and welcome to the Investment Banking Leaders Podcast. Thanks for joining us.
Yeah, thanks, Pete. Excited to be here and be chatting with you, and thank you for the kind words.
Perfect. Well, why don't we just start with you introducing Vestra Advisors and what you do for your clients to our listeners?
Yeah, so Vestra Advisors is a boutique investment bank that today is focused exclusively on the construction industry. We were founded in mid 2023, and we've been off to a busy start. To date, we've announced 4 deals ranging from a $5 billion public company sell side, and we also did the first IPO in the US of the year. From a capabilities and services perspective, we're focused primarily on M&A and capital formation, but we are a licensed broker-dealer here in the US, which means we have a lot of flexibility in terms of how we can work with our clients, what type of engagements we can work towards. Not everything needs to be transaction-based. Some are more broader strategic advisory. And that's been an exciting part of the growth algorithm for us. I think at our core, we want to provide the same level of exceptional service and quality that you get at any bulge bracket or elite boutique, but we want to do it with a sector focus, a bit of a differentiated business model, and ultimately, we believe that drives better outcomes for our clients.
Love that. And I know we might get into some of that and unpack that a bit further during the interview. Congrats on the early success and great to see the IPOs coming back. I know it's been a longer period for those, so I'm hoping 2025 is going to be stronger in that area at least.
I totally agree. We'll hope.
So before we jump into the meat of today's discussion, why don't you tell the listeners something interesting or unknown about you?
Yeah, you hit on one in your intro, which is I did, against the better judgment of pretty much everyone I worked for at the time and all of my mentors, I did take a sabbatical during the middle of COVID. And quite frankly, that worked out tremendously well for me. I returned to the job with a renewed focus, energy, and kind of drive that frankly led to where I am today. We'll talk about that more later, I'm sure, but that's one. And then I did just complete an Ironman across the pond in Europe, which was a few years in the making. I would not encourage anyone to do that the same year as you're getting married and starting a business. That was a fun one that had been on my list for quite some time, and I'm proud of. I'm enjoying a little bit of the downtime afterwards.
I bet. Yeah, congrats on that. I'm sure the training wasn't an easy thing, especially squeezing it in, like you say, with a lot of the other responsibilities and growth plans. So congrats.
Thank you.
So let's dive into the career. As I mentioned in the start of the interview, you worked at Citi for a long period. So how did working at a bulge bracket firm affect your career?
Yeah, a bulge bracket for me was a great place to start because, unlike the lucky few out there, I didn't really know what I wanted to do with the rest of my life when I graduated college. So for me, working at a bulge bracket provided me a ton of opportunity and a lot of wiggle room to navigate my career over time and figure out where was the right place for me to be longer term. I actually spent time at Citi in 3 different roles across 2 divisions. So while I was there for 12 years, I really look at it as 3 distinct careers all within the same company. And so for me, that was a huge selling point, and that mobility meant a lot to me. I think as you evolve in your career and you figure out what you want to do and with whom, at a place, at a bulge bracket, you very quickly start to make a big place very small. You'll hear a lot about when you get engaged in the smaller teams, your deal team, that the learning structure is really an apprenticeship model. And you really need to find the right people to work for and work with. And that's how you learn. And that's where the magic happens in terms of building your skill set. So I also appreciate the fact that I had a lot of opportunity of picking my home. And once I found that, again, I was able to really, drill down into the nitty gritty and build the skill sets that I think you need to be successful long term. I'd also say some benefits of scale or networking, deal flow, product exposure, geographic exposure, et cetera. All of that net, I think favorably of my time there. And I think it's a great place to start your career.
Amazing. Yeah, thanks for that. And I like the kind of breakdown that it's almost like three careers within one. And I can understand why you got that full rounded knowledge of the skills of obviously helping you now. So thanks for sharing. I know you're really passionate about taking control of your career. I know we talked about that across some of the catch ups we've had. So, how do you manage your career strategically?
Yeah. And Pete, I didn't always think this way, right? When I started, I didn't know to be thinking ahead and where I wanted to go. I was fortunate at a really young age to find a mentor that taught me this value of playing an active role in my career. And her view was nobody is more invested in the outcomes of your career and your success than you are. So at the end of the day, you need to own the results, you need to own the direction of your career, and you need to find a place where you're happy. So I think it's easy when you're young in finance, you get caught in this rat race where you interview from a young age in college, right? And then you get to the analyst role, and then you interview for the next level. Maybe it's internal at the bank, maybe it's external in private equity or hedge funds. And it's really easy to wake up one day, 10 years down the road, and kind of be like, what happened? And so, again, I think you need to own that outcome. So, the way I think about it, and I'll give you a practical example, is I talked about my three careers at Citi, right?
Sure.
Early on when I was an analyst, I identified that I wanted to make a move to a different division within the bank. I started in capital markets. I was doing a lot of great work there that I really enjoyed, but I wanted to move into investment banking. After getting some guidance from mentors, I decided that not only did I want to move to investment banking, but I want to work with a specific person. This person was highly regarded. He was also quite senior. He was a global head. And I felt that if I got to work with him, I would really get the skill sets that I needed to be successful long term. And so what I ended up doing is I reached out, almost a cold email. I think you'll find senior people are a lot more amenable and approachable than you may otherwise think, especially if you get them talking about themselves. And look, I convinced him to put me through the same interview process that he put other external hires through. Ultimately, I went to work with him. Now I'm oversimplifying this a bit, right? This didn't happen overnight. This took some time. That's an example of that would have never have happened organically. That never would have happened through the traditional channels of mobility within a bulge bracket. That was something that I sought out. I set out a plan, and ultimately I saw that through, and that's how that individual today.
Amazing. I love that. The kind of guts, as you say, to make the cold approach, and as you mentioned, not just those seniors interested in talking about themselves, but seeing ambitious individuals within the company that want to grow and see value in working under them must be really impactful for them as well. So, I guess a great learning there for anyone
And
listening.
people want to work with people who want to work with them. And so there are two sides to this equation, and don't doubt the value that you bring as a highly energized and engaged junior person that ultimately can deliver a ton of value to that senior banker.
I love that. And I guess to go a step further on that, what do you look for in a leader? You obviously saw something in this global head, but what do you look for in a leader that you feel is going to get you to that next level?
Yeah, at a junior level, the benefit of assessing which senior bankers you want to work for is actually extremely transparent. This is an industry where league tables are highly publicized, and the quality of a
Sure.
banker ultimately comes down to their ability to generate revenue, to lead deals, and have better customer and client relationships. So I think that side's actually easy, right? You should be able to pretty
Sure.
quickly ascertain who the top men and women are in your firm. And early on in my career, I was purely focused on that deal flow and that experience. And that meant I worked with a lot of people that were really tough, some of which I wouldn't want to work for longer term, which leads me to my next phase, which is as I progressed in my career and I felt I got comfortable with kind of the base skill sets, I thought that my toolkit was really well rounded. I started to look for different attributes in a leader that I wanted to ultimately be able to emulate in my own leadership skills, which are focused on communication, treating people with dignity and respect, the ability to not only attract top talent, but retain top talent, right? If someone's bleeding through resources right and left, that's probably indicative of some broader issue. And then ultimately,
Sure.
I wanted an individual to work with who I felt had good balance with life. Work is only one component of life. And yes, this job is very difficult, and I do love this job, but there's other things out there and I have other interests. So I wanted some semblance of balance. So what I looked for in a leader evolved over time, depending on what phase I was in my career.
Like that. Yeah, and I guess, as you say, deals is a good basis for understanding success and then looking around for the other skills. And I've heard it echoed by other leaders that it's so important to pick your environment, pick the leader, and that's going to be key to you moving up the chain and making the most of your strengths as well, I
It
guess.
it's
So definitely
positioning yourself
resonates.
for success. A big part of succeeding is positioning yourself for success, and you can control that. You can take that into your own hands to a certain extent. So I really encourage that. It all comes back to taking some ownership over your career.
Yeah, and I want to touch a bit on goal setting. You touched on the Ironman and doing that, and I know that was a personal goal of yours over a few year period. So taking control of your career, setting goals, they go well together. Can you talk a little bit about how you do that, how you set your goals, and how you approach that?
Yeah, I think about this all the time, and I'm pretty systematic in my approach. I don't want to get too boring, but I really do try and break it down to near, intermediate, and long term. And I try and layer in some degree of specificity and an ability to track progress. That way I can benchmark myself over time. What does that look like? I think we talked about, I think in 5 year chapters. The reason I focus on 5 years is because within 5 years, I can break it down further into 1, 3, and 5, which is a healthy mix of near term, very clear, very measurable action items. And 5 term are my longer term strategic goals. I'll be honest with you, anything outside of 5 years, I don't even worry about. I don't stress about it because I have no idea where I'll be in life and what I'll be doing. I think that's part of the excitement, but I just don't really stress about that because I don't think it's practical to really plan and bring it back to what you do today. The 1 year goals, as I mentioned, are definitely more defined, more actionable. I think of it like public company quarterly guidance, right? Like, where do you want to
Yeah.
be tracking on a more regular, consistent basis? You should know pretty well on how you know are progressing. And the longer term ones, there's inherently going to be some reforecasting. You got to be dynamic. Things change, life changes, but directionally, the direction that you're moving in. So I think my advice is to try and add some sort of framework to formalize the process, whatever works for you. Track your progress and just be honest with yourself. You may not achieve all your goals, but having those and having something to work towards, I think, is really important.
I love that. I can take something away from that. I'm pretty good on the year, but maybe not as good as looking at the mid and long term goals. So definitely taking some notes, and I think I can do a bit better there. Thanks for sharing your method and how you go about it. I want to pull back a second because you mentioned leadership, you mentioned finding the right leader, and you touched on mentorship briefly, but we didn't really unpack it. So, how important have mentors been for you, and how did you find the right one? That's a question I get asked a lot.
It's a great question, and it's never going to be one size fits all, right? And I think that's important because you talked about my experience at a bulge bracket. Bulge brackets tend to have formal mentorship programs where day one, HR provides you a mentor. And for some people, maybe the lucky few, that turns out to be a great fit. But for most of us, it's not, it's unnatural. And so I think it goes going back to the general theme of taking a little bit more ownership. I think the most valuable mentors for me are those that I sought out for specific reasons or perspectives, or that evolved more organically, and that we had a little bit more of a closer personal connection. So I think the formal mentorship programs are a great place to start, but I wouldn't stop there. That's only kind of the bare minimum. I would always encourage you to go out and seek not only a number of different mentors with different perspectives, but also to constantly be rethinking of those relationships because you may lean in and out of certain mentorship relationships over time based on where you're at in your career. I'd like to have a pretty diverse set of people that I go to. I like some to be those that I work with that may know my work and professional circumstances extremely well. I have people that are outside the industry because sometimes you get so lost in the sauce and you're focused on such a narrow vertical that you can lack perspective, right? And sometimes
Sure.
the challenges you're faced with, an outsider can identify it, you know, easily. And so I think being proactive, trying to have some diversity in thought in who your mentors are, and just embracing that it's going to be a never ending process. The same mentors when I started my career are not the same as they are today. Some aren't, and that's okay, right? You're ultimately what I look for them is that different perspective.
Sure. And I can see why having some outside the business as well, fresh perspective can really help. You touched on the mentor that you get given essentially or assigned to you early in your career. Are there downsides to mentorship programs at the Bulge brackets?
I don't like to focus on the downside. I think it provides a baseline opportunity. One of the good things about a
Okay.
mentorship program is that on the other end of that is someone who effectively volunteered to serve as a mentor. You have a willing participant, right? It's not like you're getting assigned some grouchy person in another division who wants nothing to do with you. Often it's someone who benefited from mentorship, believes in the process of mentorship, and wants to help you. It's a good resource,
Great.
right? It's an opportunity. It's day one. The downside is if you, like I said, if you stop there, if you become complacent, and you say, okay, this is my mentor, this is all I have, and you
Mhm.
stop that process of broadening the circle and seeking out better fits, right? So I think it's predominantly good. It gives you a baseline in a time of your career where you're thinking and trying to manage so many other aspects of coming into the job that it's provide you some safety and security, but don't stop there.
Yeah, I love that. Don't get comfortable, get out the comfort zone, look for more. So I think again comes back to taking ownership over the career, right, and your path. So love that. Let's talk a bit more about where you are now. We have leaders listening today who are maybe thinking about setting up on their own. Talk to me about how you made the move to found Vestra.
Yeah, and this is the fun stuff. I always knew I wanted to start a business at some point in my career. So this idea has been a long time in the making, but I didn't really know when was going to be the right timing. And frankly, timing's a huge part of success for any new business. Interestingly, I started to think about this a lot more, call it 3 to 5 years ago, with my coverage of construction technology businesses. Most of my clients are still founder led. And over time, I was inspired a bit by my clients, and they gave me not only confidence in being able to achieve and start my own business, but they also got me comfortable with accepting the risks. I think one thing that founders are really good at is embracing change, embracing potential failure, being
Mhm.
comfortable with the fact that things may not work out or they won't work out as you initially expected. But hopefully, if you bring the skill set, you're dynamic, you're nimble, you can make it work. So in terms of making the move, it was extremely easy and wildly complicated all at once, which I know is contradictory. But on one side, when I told my former employer I was leaving, I gave them 2 weeks' notice. They laughed at me, said, "You're absolutely insane, but good luck." And that chapter closed very quickly. On the flip side, when I had to start building Vestra, there were a lot of daunting tasks, right? There were a million little things that I had to do yesterday. The benefit is that I actually do believe pretty strongly that your experience coming up the ranks in investment banking prepare you very well. My dad always had a saying growing up, which was make a plan, work the plan. And idea is he was really trying to convey a balance between strategic planning and execution. Don't overthink it too much, but when you have a plan, put it in action. And yes, I spent a lot of late nights researching, being thoughtful about what we wanted to build and how, but then it came down to just executing. And that's a big part of banking. I'm pretty consistent and pretty resilient and have a pretty decent ability to focus and follow through on things I say I'm going to do. So when it got down to putting together all the small pieces of the business, technology, systems, legal, payroll, regulatory, compliance, to me, it was just like working through tasks and just hammering them out. So I felt that that part was a little daunting, pretty complex. It's ongoing. Don't get me wrong. It'll never stop. That's part of the fun. But I felt I was pretty prepared for that.
There's a lot to to be inspired by. The fact that you were spending time with founders and working with them as clients and yet saw something in them that helped inspire you, I think that's amazing. And make the plan, work the plan. I think that's going to stick. So I'm sure your dad will be pretty happy. And I can understand how your experience growing up in investment banking has obviously helped you step out on your own with a lot of those skills that you mentioned and the work ethic that was probably required. What would you do differently, knowing what you know? If you had to set it up again, what would you change?
I don't think anything. Part of me says I wish I had done it earlier, but quite frankly, I don't. I think if we had done this, or I had done this right before COVID, I don't think we'd be in business. So I talked about timing, and timing is pretty critically important. And circumstances came together just quite nicely in terms of our sector coverage and our deal activity in our business. We were able to get busy really quickly. So I don't think there's anything I'd change. Are there things that haven't gone exactly according to plan? 100%. But I knew that. Part of my decision to leave, and I talked about this with my founders and my client coverage, was just accepting risk, right? I bet on myself and I accepted the risk that, and this is the continued risk that exists today, that I could fail. We can fail. I may have to go look for a new job in 2 years. But the trade-off is that if we make this successful, the upside is exponential relative to anything that I could do at an established firm. And so I think it's one of the best kept secrets in investment banking, but being an MD or a partner in an established firm has a lot of benefits. And most people, when given the opportunity to risk it and build something new, would decline. And even if that upside is significant, to me, I had to embrace all the risks associated with doing this because otherwise it would be foolish not to. And I was comfortable with that.
I love that. And again, you got to get, like you say, it's getting out of the comfort zone again, isn't it? I can
Yeah.
understand why you say that. If you're risk adverse and you're really comfortable in your role, and yet this is a lot of risk involved in stepping out. So, well done to you and the team. And I'm glad it's been growing quickly. What's been key to your early success at Vestra?
I think this job at its core does not change between a bulge, between a boutique, established boutique, or forming a new boutique. You need to be laser focused on delivering for our clients, delivering exceptional quality. Our clients, and this isn't always obvious when you're an analyst and sometimes even associate, but our clients are demanding, like exceptionally demanding. They pay a lot of money to get a certain, level of service and quality. And unlike what you're taught when you're growing up, you don't always get a second chance. And so you cannot have a lot of mishaps or failures. And so that tolerance is very low. So I think a part of our success is that we were so focused on maintaining and delivering the same quality and service that each of us and my partners have done our entire careers, and not giving anyone an excuse or a reason to doubt us. Like, we were relentless. And that's like product market fit for a startup, right? That's what the market demands, and reputation is everything. And so we were just focused on quality and brand recognition from the start.
Amazing. And again, with your level of experience and expertise, I can see why, and your dedication to being the best in the market. And talk to me a bit about why you see Vestra has such a strong space. I know you were talking to me about the efficiency and how you play. Can you talk a bit more about that?
Yeah, I think what makes us unique is that we're a sector focused boutique advisor. So we combine a lot of the industry expertise that you would get with the traditional bulge bracket coverage model. We know the construction
Sure.
space as good or better than anyone. But we also combine that with a transaction oriented, independent advisory capabilities that allow us to work with our clients in a way that is user friendly, that provides bespoke solutions, right? No two clients or deals are the same. And it allows them to navigate our industry with ease and confidence. And so I think that's a big part of it, combining these two superpowers, which are you need to have transaction expertise and knowledge and capabilities. But if you also need to really understand your clients and your industry, and if you can package that together, I think you can generate some really exciting results. So that's a big part of our model, our delivery model, and how we try and differentiate ourselves. We often compete against more sector specific shops, but that don't have the capabilities of working on large, complex, highly structured deals. Or we're competing against an established boutique that has great bankers, but they are frankly not as well versed on the construction industry in particular. So we try and sit in that in between where we think there's a tremendous market opportunity.
Nice. So I can understand why you're having success there. So thanks for sharing. I want to change gears a little bit, jump into leadership. We're a leadership podcast. We do ask our audience for questions. And one thing that's come up quite a bit recently is managing client relationships. Obviously, building trust, delivering tough news, managing expectations is super critical to success in the industry and really critical at the more senior levels. As someone who can do that, I'd love to learn a bit more about how you do this effectively.
It's a great question because I think client relationships and how you develop them are a bit misunderstood when you're first starting out in the industry. I think first and foremost, developing relationships takes time. It does not happen overnight. And oftentimes, some of the relationships that you make as an analyst with an individual at a comparable level with your client will grow with you in your career. And if you establish that relationship at a young age, you may find 10 years down the road that the business development manager is now heading corporate M&A and he's your go-to guy for any strategic discussions. So I think my first on this is just consistency. There's all sorts of sport quotes about showing up and how much of a difference that can make, but it truly is a critical component to success. You need to be consistent. That needs to be over time. That needs to be measured in years. It's going to take time. Be patient, be consistent. The second one, and this is a bit controversial, and some folks may not love it, but you need to show up with something worthwhile to say. There's been a big push with junior bankers getting more senior face time with clients at a young age. And I think that's great. Understanding how clients think and where they're focused, observing is great, but that should not come with a trade off in developing skills and tools that later you'll need to be relevant. I always ask someone if you were in front of the CEO of XYZ company today, what would you say? And if you take the time to develop your skills, you take the time to learn the products and services, the industry that we work in, when you have that audience, you'll have something worthwhile to say. And that's really empowering. And that is when you start to develop reputation for being a thought leader, right? Having quality content. So I think that content's a really important second piece. You talked about tough news and building trust and rapport. I think some of this you can probably leverage lessons learned internally with how you manage up. You want to be transparent and balanced in your advice over time. You don't want to overpromise and underdeliver. You want to manage expectations. You need to have the conversation and you need to get comfortable having the conversation. You very well may mess up with a few clients, or it may be a little bit choppy at times, but being transparent, being balanced, and having the conversation, you'll get better with reps. Lastly, post-COVID environment that we're so focused on Zoom and digital interaction, you cannot substitute in-person, face-to-face meetings. A CEO or a chairman is not going to share sensitive information over a Zoom. Everyone's been conditioned at this point that you don't know who's listening, you don't know who's on the other side. Are you being recorded? It's just not going to happen. So it's a bit old school in me, but get on the road, get in front of people. That's how you'll develop rapport, those in-person meetings.
I love that so much. And then again, I connects with me and is similar to how I think. And what a great acid test. If you're in front of this CEO, what would you say? I like that. That's a good one to get people thinking. Consistency, show up, build the relationships from a young age, essentially young in your role. And be knowledgeable. I like that about having something valuable to say. Don't be the kind of monkey with the cymbals, right? That's just making a lot of noise, but making the wrong noise. So I think that's
We
key.
call them golf course bankers. They have their place, but ultimately, if you want to be a perennial thought leader industry, you need to focus on content and differentiate yourself. It's a very competitive industry. And if you're not constantly elevating your game and thinking through creatively new solutions, someone else is.
Yeah, for sure. Like that. And let's talk a bit about skills. We talked a bit about skills for investment bankers and succeeding, but to be a great investment banking leader, what do you feel are the most important skills?
There's a lot of traditional skills I think get hit on a lot around communications key, analytical skills and a framework, obviously very important, discipline. But I think there's a few kind of Other skills that don't get hit on a lot that I think are really important, and honestly, I think about a lot in the last or have over the last 3 to 5 years as I hone my own craft. I think the first is active listening. Bankers love to talk. I'm guilty as well. My wife tells me often. But if you walk into a meeting and you spend 60 minutes talking to your client, you may walk out feeling like you absolutely killed it. And your client may walk away thinking that was the worst meeting he's taken all day. I think the best meetings are when you say the least and you don't even open a book. I'm sorry to the junior team. I know they spent a lot of time on those materials. They do have value, they do get leverage, but not always. And so I think focusing on active listening is critical because you miss so much when you're the only one talking. And if you're trying to jam a product down someone's throat who doesn't want to hear it, eventually they're just going to stop taking the meeting. The second one is creativity. People don't think of bankers as always the most creative, but I do think that's really important, right? We just talked about a minute ago, it's hyper competitive. There's a lot of people out there. There's been a resurgence in a lot of boutique advisory shops that are focused like Vestra is. So having something that's differentiated, an idea that's not oversold, you can capture mind share like that. And that's ultimately what you're going after. I wouldn't be afraid to think creatively, a little bit of a different approach. And the last one I'll give you is business judgment. This is probably one of the most elusive skills, and you'll find some people that believe you're either kind of have it or you don't. But I do think you can hone this skill over time. I do think practice and reps and soliciting feedback, reflecting on that feedback, you can be mindful of strengths and weaknesses. But being able to hone that business judgment over time is important as you think about how you convert all these relationships and these opportunities to a business and generating revenue and transacting.
Creativity, active listening, not talking too much in the meetings, balancing comes up a lot. But business judgment's a new one, so I really love your take on that. And is that just reps, or is there certain things you read or try to do to develop better business judgment? Really keen to get your take on that.
I try and study the seniors that I respect most in a not creepy way, but that's what they do best, right? They have little decisions along the way using their judgment to get hired for certain transactions, to get certain transactions completed when times are really tough or there's a big bid ask spread on value or structure, et cetera. It's that little in between that the best bankers do. That's what makes them better bankers. So I do think this goes back to your mentor, who you work with, and really trying to be a student in terms of seeing how they do things and unpacking that and trying to take it into your own approach. So I don't think it's just reps, right? It's not like an LBO model you just got to build and eventually you got it.
Mm.
I think this one's it's very tricky, but if you're very mindful of it and you try and, pay attention, you will learn a lot over time. And so that's my approach. I really try and understand what those that the people I respect most, what they do and why. And sometimes I just ask them, why'd you do that? And you'll get a good
Yeah.
answer.
It seems really simple, right? Be intentional about it and really try to soak up the skills of the leaders around you. So I love that. Thanks for sharing. And what are the biggest challenges do you feel leaders in the industry are facing today?
Oh, I think in a post COVID environment, the world of how you manage your workforce, how you manage your talent and talent retention has changed a bit. It really does. And as a new business, we have to think a lot about what do we want our status quo to be? Do we want to be in person? Do we want to be remote? How do we balance broadening our available labor pool, getting the best talent, employee retention, making sure that they're not only productive, but also feel they're compensated fairly and feel like they have a healthy career with opportunity? So I think there used to be what felt like a little bit more of a template driven approach to the Wall Street machine in terms of who you recruit, how their career progresses. Even dating back to when I started as an analyst, it was really after the great financial crisis that analysts were allowed to be promoted to associates. Prior to that, you were kicked out. You had to go to business school, right? That has rapidly
Wow.
changed in the US. In fact, we specifically target analyst promotes, right? We prefer people who are started their career as an analyst because we think that the technical skills that results in are really valuable. So Your approach to workforce and employee, I think that's a real challenge. You have to compete in a competitive industry. You also have to compete with other industries like tech that are pulling, whether you want to admit it or not, a lot of top talent away from the industry. So that's a challenge. Another challenge that we try and turn into an opportunity, but there is a lot of technology out there. There is a lot of new systems, new databases, ways to manage your operations that you can leverage to be much more efficient. That is something that we spend a lot of time and have invested pretty heavily in, right? We wanted systems and tools that are second to none and that allow us on a per person basis to punch way above our weight. But that does come with risks. It's not the fun stuff, data privacy, cybersecurity, regulatory compliance, but that world is also evolving rapidly. And it is definitely a big challenge and can be a risk. Also, we talked about Vestra Advisors is not alone. There have been a number of boutiques that have started up, and I feel like that trend is accelerating. I'm confident that the overall market share of boutiques versus Bulge have moved considerably in favor of boutiques over time. And I feel that the competitive environments probably continue to be more fragmented. And so, how you navigate that landscape will always be a challenge that you need to think of as a leader.
And what's the drive? Super interesting your take on the boutiques, and I think you're right. By the way, we do see more and have more and more leaders of these boutiques on the show, like you today. What do you think's driving that increase in the boutiques?
At the end of the day, clients want the best execution, the freshest ideas, and they want confidence that their advisor is going to be there for them and is capable of seeing through on the transactions that they're retained to work with. So I don't think the standards have necessarily changed. I think perhaps one of the bigger challenges if you're at a Bulge is oftentimes the ability to cross sell a lot of products can result in quality control issues, I'll say, in terms of if you sell 10 things, are you selling 10 exceptional things or 10 things at a combined price and value that may save a few dollars? So, anyways, I think if as long as you're focused on providing exceptional quality and service, that'll win. And I think boutiques, because you're more focused, I don't have to fret about cross selling a bunch of products I'm not well versed in and that my client may not want because our economic model is simply different. And so I
Yeah,
think
definitely.
that focus and that alignment goes a long way. So I think that's a pretty big reason.
Really interesting, and I have heard that echoed by other leaders of boutiques and founders. That it's that personal care and attention, and the extra focus, the expertise that's really making the difference. So, thanks for sharing your side of it as well. We're coming towards the end, believe it or not. It's flying by. We've touched so many bases, but I guess to start towards the wrap, what's really helped you grow and develop as a leader?
Continually harnessing your skills and growing. I think to me, there's a certain level of intellectual curiosity that I've always had where I'm always thinking about how I can do things better, right? How I can get more experience, how I can get new skills, improve my existing skills. So I think a big part of that is just a mindset over continuing to learn, continuing improvement, and never really being entirely satisfied with where you are today. I think that's just a reality of kind of how I think about the world. Other things that have been really, impactful for me over time, and we keep, focusing on this is just playing an active role in your career and in your development. And I truly believe this is an industry that lends itself to proactive people that are willing to take the time, effort, energy to direct their career. Those are a few that I think about a lot, and I think have been really impactful for me. Um, that we haven't maybe touched on a ton quite yet.
Perfect. And as a listener of the podcast that I know you are, I believe leaders are readers. So, which books, podcasts, materials do you recommend that have had a big impact on you?
Yeah, I love this question. And I'm not going to give any of the finance books that are well covered in your prior interviews. I read a lot, and actually, most of the reading that I do outside of work has nothing to do with the profession. I spend all day reading a lot of literature and whatnot, and I've gone through many of the stored and legacy books in finance that I feel I've earned the right to move on to different things. A few interesting books that I like actually about life outside of work: The Art of Happiness and The Book of Joy.
Okay.
These are two books authored by the Dalai Lama. The second one also has Desmond Tutu, and they're just a great perspective on finding balance. especially in a world that's ever changing and all the more complex. I also read a lot of historical fiction. My general
Okay.
strategy is to pick a historical event in a time or place that I don't know a ton about. Sometimes that's in the US, and just dive into a random book on that topic. And again, because they're fiction and it's a little lighter hearted, they tend to not be as serious. I think from a more practical standpoint, if people are, how do you start your day and how do you get sharp and smart in the markets? I start
Mm.
every morning with Squawk Box. I throw it on my iPad as I get ready. That's CNBC for those in the US. It just goes through the markets and a preview on the most important financial market driven data. I walk to work or when I walk the dog, if I'm working from home, I throw on the Intelligence podcast by The Economist. And then on the way home, I typically cycle through 2 to 3 other podcast providers that are a little bit more. I pick my topics, pick my journey, but I do try and make use of all that time in transit with learning something. And I do think that's helpful over time because I think you absorb a lot more knowledge and you absorb a lot of knowledge that's, again, not necessarily finance dependent, but I think makes you a little bit more of a well-rounded, individual.
The growth mindset comes through, right? Don't commute without learning
Yeah.
something. I love that. And thanks for shares. And I think books about happiness and joy, as you say, are always good things to build, right? Especially given some of the stuff we've had to live through the last few years. Final question before I let you get back to it, Bryan. If you could go back, what would you tell your younger self, knowing what you know now?
I would say take more risks. Be afraid to fail. Failure is inevitable. And the younger you are, the easier it is to take risks. That was a big part of my journey to Vestra now versus 5 to 10 years from now. I'm in a position where I think I still have a very high risk tolerance. So that's definitely one. The second one, and we talked about this a little bit with clients and cultivating relationships with your clients at a young age, but this is slightly different, which is do not underestimate the value of your analyst and associate class and what those people will go on to do with their lives. Making sure that you not only develop relationships, which you will, that's part of the fun of working at a big place out of school, work with a big class that you grow quite close to over a lot of late nights, but really cultivate those relationships over time and maintain them. There's no quick fix to developing relationships, whether they're clients, whether it's your network internally. And so the younger you start, and it may feel boring and programmatic to keep lists, but do it. If you can really start to leverage those relationships, I think you'll find as you move up in the industry, or if you exit the industry and move into a different industry, it'll pay a lot of benefits down the road. So I wish I did a better job at that at a younger age, playing a little bit of catch up. There's only so much catch up you can play.
Love that. And it comes back a lot as well. Really make use of those relationships early on. So take risks. Don't underestimate the value of the relationships around you and be consistent with building them. So love that. What a great way to finish. Bryan, thank you so much for sparing some time. For those that want to connect with Bryan, you should on LinkedIn. Check out what Vestra are doing. They're doing great things. And thanks for your time, Bryan.
Thanks so much, Pete. Really appreciate it.
This episode was brought to you by Outram, the global leaders in the financial deal gift, awards, and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us. And until next time, best of luck on your growth journey.